Good morning. This is IG's early morning call on IG Live on Tuesday, 6th of June. It's another sunny day here in London. Coming up in today's program, the spending in the United Kingdom slows as food prices rise. This raising bets for another Bank of England rate hike. To the RBA, another surprise 25 basis point hike there. The Australian dollar jumps as a result. And Apple unveils its VR headset. First device to look through, not at. Now, we'll have a lot more on that in just a moment. Let's check in on the VIX for you. This is how it's looking at the moment. The volatility index, known as a fear gauge, still moving downwards in this trend here. As you can see, breaking through that 18.24 mark, heading lower towards the 17 level. It's currently at 1770. This ties in with the whole wait and see stance that we're seeing at the moment on global equity markets, and also the fact that Christine Lagarde is warning of more rate hikes as many countries out there still struggle with hot inflation. With 30 minutes to go, let's have a look at what the European trading day is looking like as we count down to that. FTSE looking like a tepid open there. Similar story for the DAX and also for the CAC Coron, which is known as the France 40 on the IG platform, looking like we are going to have quite a somber start there. But that's no surprise. Many people are on their summer holiday because we've had this sudden burst of sunshine in many parts of Europe. But also there is this, as I mentioned earlier, wait and see stance, investors waiting on the benches until we hear more from either the geopolitical side or indeed from economic data to give us a better idea of how the next quarter is going to look. Overnight in Asia, we have this picture. Most indices there higher, as you can see. However, the S&P ASX 200 closed down. More on that and the RBA in a moment. In Taiwan, the chip maker TSMC said it's expecting its performance to be better in the second half of the year. This is after it told investors that its revenue is to drop 10% in the first half in dollar terms. The Nikkei there edged higher. Mining stocks and Uniqlo operator fast retailing leading the gains there thanks to technical support for heavyweight stocks. Now, US indices ended the session lower, but it was up in the first part of the day in the market, hoping the S&P 500 would end the day in bull market territory. However, as you can see, they're all down arrows, not by much though, it has to be said. Apple, I want to show you that as well, ended the session lower, but not before setting a new all-time high in the session. Let me show you that chart right now. Apple looking like this on all sessions on the IG platform. As I mentioned earlier, not before setting a new all-time high in session of 184.93. But we'll come back to Apple a little later in the show and just showing you what is happening ahead of the Wall Street Open. There you have it. Same story there. Investors sitting on their hands and taking that wait and see attitude. So looking like a flat start there for Wall Street as well. To the United Kingdom, and British retail sales unexpectedly slowed in May to a 7-month low. This is according to the British Retail Consortium. Now, spending at the BRC's member stores rose 3.9% year on year, below the 5.2% recorded in April. The actual reading also missed an estimate of 5.2%. The weak consumption trend is unlikely to change in the coming months, according to BRC Chief Executive Helen Dickinson. Food was the only area where consumers spent more last month because of 2 bank holidays and the long weekend of the Coronation. Shoppers, though, reined in spending on non-essential items. And the latest official figures revealed that food price inflation remains near a 46-year high at around 19.1%. All this showing little signs of coming down in the near future. And this, of course, is giving the Bank of England more ammunition to continue to tighten. The BOE reiterating it will keep raising interest rates if inflation looks persistent. The bank is now expected to increase its rates to 4.75% from 4.5%. This is its key rate that everyone looks at its next meeting on June the 22nd. The market currently pricing in rates peaking at 5.5% later this year. In Australia, the central bank there unexpectedly raised interest rates by a quarter point, taking the cash rate to 4.1%. A Reuters survey published last Friday said economists expected the RBA to stay put, forecasting the cash rate to reach 4.1% only by the end of Q3. Now, a hawkish RBA added that further tightening could still be needed to tame inflation, currently pointing at 7% year on year. The Australian labour market also remains hot, and the unemployment rate is at its lowest point in nearly half a century. And just taking a look at the Aussie dollar versus the US dollar now, as you can see, there's quite a reaction, jumping to a 2-week high, that crossed 4-month high against the Kiwi dollar, and at a 6-month high against the yen. In Germany, we've got factory orders there falling by 0.4% in April month on month. This is after negative 10.7% in March. Economists had expected a 3% rise. And a bit later this morning, we're looking out for retail sales in the Eurozone. It's expected to rise by 0.2% in April month on month after a 1.2% drop in March. To corporate news, and I'm just checking in on the British American tobacco chart for you on the IG platform, looking like this at the moment, following this downward trend towards that 2,550 or 2550 mark. It's been trending lower since the sort of mid-May period after hitting that resistance point of 3,000. British American Tobacco, as you know, sticking to its 4-year revenue growth forecast. The tobacco group expecting a 3 to 5% rise in organic revenue at constant currency rates for 2023. And it's betting on steady demand for its vaping and oral nicotine products. BAT has been in the headlines recently due to controversial legal issues in the US. However, it's its earnings that's making headlines this Tuesday. Apple has unveiled at its annual developer conference yesterday what Tim Cook has described as the first Apple product that you look through and not at. Called the Vision Pro, it's a new virtual reality headset that investors already see as the group's riskiest bet since the introduction of the iPhone. Why? Well, first, its price starting at $3,499 US. It's more than 3 times the cost of the priciest of its competitors, the Meta Quest Pro. It's also risky because Apple enters a market that is already crowded with devices that are struggling to gain traction with consumers. Currently, the virtual reality market is dominated by Meta, which controls around 80% of the market, and many see this latest Apple venture as a next episode of years of clashes between the two companies. Apple also said it's been working with Adobe and Microsoft to put their apps on the new headset. Available early next year in the US, owners will also have access to Disney Plus streaming service and Apple TV Plus. Listen out, parents out there. Now, the Apple has also been interesting recently because it's trying to combine all its products with this virtual headset to ensure a new revenue generation line. Just looking at Apple's shares there for you. Of course, Apple and Meta and many of the competitors in this space understand that it's also a huge sinkhole for research and development dollars. Many analysts and many investors have been waiting for the payback. And besides the headset, Apple has also unveiled a new 15-inch MacBook Air and a powerful chip called M2 Ultra. Investors hardly excited though if its share reaction is anything to go by. The stock set a new all-time high ahead of the launch, but ended the session down on the IG platform. And finally, let's have a quick look at oil prices, given the action that we've seen from OPEC Plus after it decided to prolong its output cuts, and also that Saudi lollipop that we talked about a great deal in the previous show. There you have it, crude looking like this on the IG platform, meandering slightly lower there at around 7142. And a quick look at gold prices, because that's also been an interesting space given all that central bank action. However, they're now easing bets that the Fed will continue to press on with its very, very aggressive rate hikes. And spot gold, as you can see there, has been coming off recent highs as well and heading lower towards that 1940 mark. And that's it for now. Just a reminder that we'll have charting at 10:30, and for a full lineup of what to expect on Wednesday, join me for IG's look ahead a little later. Until then, that's it for me. Go along with it all.